All right, we'll give it a minute as people join before we go ahead and get started. I see them rolling in now. Okay, great. See people joining. All right, I'll give it one more second. All right, I'm sure people will continue to join over the next minute or so, but we'll go ahead and get started. So good afternoon, everyone, and thank you for joining us today for our first Nisivoccia Presents program of the new year. We are happy to offer this program to our clients and share information that is useful and relevant to yourself and your business. So we're excited to be kicking off the program with a great presentation today given by Glenn Schwier, who is a CPA, JD, and a partner in our tax department. So it seemed we had a lot of interest in this topic on what you need to know about 1099s, and we're happy to have all of you and Glenn here today. We encourage you to ask questions, and Glenn will get to them at the end of the presentation. So with that, I'd like to begin our Nisivoccia Presents webinar on 1099 reporting and introduce you to our partner, Glenn Schwier, to take it away.
Hi, everyone. You know, this time of year, the 1099 questions just kind of pile in. You know, I get them from the staff and I get them from clients. So I figured, you know, why don't we do a presentation to all our clients to give, you know, kind of an overview, the kind of basics on 1099s, and particularly, you know, what I'm really concentrating is the 1099 NEC, the non-employee compensation, and 1099 miscellaneous. In 2020, the IRS kind of created the 1099 non-employee compensation, which kind of created some confusion the first couple of years, and now we're, I believe, in the third year of this 1099 NEC. You know, I'm going to kind of go over the basics. You know, it's tax rules, so therefore every rule probably has an exception, and I'm going to try to kind of high-side it and kind of go into the issues that I know clients generally have. So, you know, there's probably issues out there that you might have a question on that I'll happily address either at the end of the presentation or, you know, individually. But, you know, I'm trying to keep it really on the high side, the questions that a lot of clients have. First off, real quick, why do we do 1099s? You know, the IRS gets millions of tax returns. They can't audit them all. It's why we file W-2s. It's matching. And this is why the 1099s are so important to be done, and why, if you're ever audited, it comes up that you didn't issue 1099s. You know, the IRS matches what you file with people's tax returns. So it has real consequences to the individuals, and it could have real consequences to your, you know, your entity or your business if you don't file them. You know, a big question comes up, you know, particularly with 1099 NEC, employee versus independent contractor. You know, I'm not, this is a whole separate topic, but I just wanted to address it, is, you know, New Jersey DOL, the IRS, particularly New Jersey DOL, are very aggressive on this issue. So if you have someone working only for you, you control that person's work. You know, New Jersey audits you, the DOL audits you, they're going to probably find that they're an independent their employee, not an independent contractor. So we're not, that's the general issue, whether they get a W-2 or 1099 NEC. So I just want to address that and be aware that New Jersey is, you know, as most issues with tax-wise, New Jersey is very aggressive, and try to keep that in mind. You know, what information we need to complete 1099, this is, you know, just the very basics. If I could have you guys do one thing, the first step is get that W-9 out to your new vendor, your new service provider, and have them complete it. It is a lot easier, as I'm sure you've experienced, getting that W-9 filled out before you pay someone than after you pay someone. You know, once you pay someone, you know, they disappear often. Most people are willing to do it, but you'd always get those people who are kind of disappearing. You can't get the W-9 provided, and you don't have the information to complete a 1099. So that's the first step, is get that W-9 out to your client, to your provider, your service provider, your vendor, anyone who you think you might possibly need it, and have them complete the W-9. The W-9 basically has all the information that you're going to need, you know, pay's name, address, social security number, EIN number, you know, the amount paid, that you're going to figure out later as you make the payments. But the most important one I think that people miss, and the reason really the W-9 is better than just getting someone's information, is the federal tax classification. You know, as we look at this, box 3, it has the tax classifications. And some classifications do not get 1099s. So, and if you look at the certification in part 2, that person is signing under penalties of perjury of what they are. So you can rely on that W-9. If they're swearing that they're a C Corp or an S Corp, and we'll talk about these later, it has impact on whether 1099s need to be issued. And they're signing that under the penalties of perjury, and you can rely on that. So, you know, one of the biggest issues, and we're going to talk about this as we go along, is the individual sole proprietor, single member LLC. You know, what I always try to tell my clients, a lot of LLCs are owned by one person. They haven't checked the box, and we're going to kind of talk about LLCs as we go along. You know, that person, you generally want to use your social security number. If you're reporting that activity on your 1040, you're reporting that as a Schedule C business on your 1040, you want to put that, you want to use that social security number, because that's where that activity, that 1099 is going to be issued. A lot of people don't want to disclose their social security number to all the companies that they're working for and receiving checks for and going to receive 1099s. But, you know, technical answer is they probably should give their social security number. And if you look at line 1, that shows the name that you're going to file the tax return. You're not filing the tax return on John Smith LLC if you're the sole owner of that LLC. It's a disregarded entity. So the real name that's going to be filed under is, you know, John Smith. So therefore, John Smith should use his social security number. But as I said before, the number one important thing is send this out to your vendors, send this out, make them complete it, and have this on file. And then, you know, every couple of years, you probably should update it as well, because people move, the name of the business changes. You know, you want to check and make sure that's being updated properly. You know, I thought the most important thing is first figuring out who gets 1099s and who doesn't get 1099s. And you issue 1099s if you are engaged, you're making that payment as part of a trade or business. If you're not engaged, if this is a personal payment, there's no 1099 that is required. If you're paying an attorney to handle your divorce on a personal level, you know, that's not engaged in a trade or business. You don't have to report that. So that's not a 1099 payment that an individual is doing. The other part of it as well is the $600 threshold. This is for the 1099 miscellaneous, for most things on the 1099 miscellaneous, and particularly the 1099 NEC, non-employee compensation. It's a $600 threshold. So once you make those payments, $600, you have to file it. We're going to talk about incorporated and medical providers and legal services. Corporations, this is very important, corporations do not have to receive 1099s. So if they're doing that W-9, checking off C corporation, checking off S corporation, then they do not have to receive a 1099. You know, the government basically feels that the corporations are more sophisticated business entities, and they're going to report that income without the issuing of 1099s. So it's important to get that W-9 and see where they checked off S corporation, C corporation. This is probably one of the greatest areas of confusion for small businesses, small taxpayers who have to file 1099 for their, you know, Schedule C business. Is limited liability company. It says company. In most cases, a limited liability company is not a corporation. They're either a disregarded entity or they're a partnership. In rare cases, LLC can check a box and file a form and be a S corporation or be a C corporation. The 90+% of the time, when you see limited liability company, it doesn't mean that they're a corporation. It do not have to receive a 1099. They are not a technical corporation. It's just part of the name, limited liability company, which creates that confusion, but they are probably a partnership or disregarded entity and are required to receive a 1099. Now, the other confusing area is attorneys and medical providers. Even if they are an S corporation, even if they're a professional corporation, they still receive 1099s. You know, the government, for whatever reason, deems that they need to file 1099s, and therefore, attorneys, medical providers, whether they're a partnership, whether they're a S corporation, they have to file 1099. They have to receive 1099s. So you, as a business, engaged in business with those people, attorney, medical provider, even if they're a corporation, you issue them a 1099. And we'll kind of talk about attorneys and the difference between 1099 NEC and 1099 miscellaneous in just a second. I know we've got quite a few of our public entity clients on the call, as well as our clients in the commercial department that are tax-exempt entities, governmental entities. You know, this kind of comes up all the time. You know, governmental entities often, you know, there's one rule for the private sector. There's one different rule for the government clients, the state, the county, the municipality, the Board of Education. Same thing with tax-exempt entities. Therefore, government entities do not receive 1099. So if they receive a payment, if you're paying a tax-exempt entity and they checked off on the W-9 that they were tax-exempt, they don't receive a 1099. But government entities, tax-exempt entities, issue 1099s. So if they're paying providers, they have to issue 1099s. And that's a little bit confusion when people start out, is they think they're tax-exempt, they know they don't have to receive 1099s, but they think they don't have to issue them as well. They do have to issue them. They do have to issue 1099s. Another one that's kind of interesting that I think kind of gets missed on a lot of levels is if you're writing a check, you're making a cash payment, you're writing a check, probably more probable than a cash payment nowadays, you know, you have to issue a 1099. But if you're making credit card payments, those credit card payments are reported on a different form to that vendor. So therefore, credit card payments generally you do not have to issue a 1099 if you paid a service provider, a person with a credit card. That's something very key to keep in mind. So even though you paid them $10,000 that was paid on the credit card, you know, keep in mind that payment probably, if it was made on a credit card, there's no 1099 that has to be issued. We're going to talk about generally cases that those type of people are going to receive a 1099-K from the actual credit card company, the financial institution, but we're going to talk about these separate rules, which were in the news recently on changes that were made with those rules. But the key factor for most of you, credit card payments to a vendor, service provider, no 1099 has to be issued. Check, cash, 1099. You know, one of the issues too with 1099s often happens is it's got to be a U.S. person. Question kind of comes up all the time with you have people working for you in, you know, UK, Italy, France, a different country. They're not U.S. citizens, they're not U.S. persons, they're not U.S. residents. Those people don't have to receive 1099s, but they should fill out a form W-8BN or the other forms W-8BNE. That's for a entity. They should fill out one of the W-8 forms to document their status as being non-U.S. based. And also, I generally tell my clients is that they should get a statement, sworn statement from those people saying that all their services were performed outside the U.S. Now, once that foreign person starts performing services in the United States, then, or if they're a partner in a partnership, or they're selling property here in the U.S., you know, a lot of times the U.S. person is not going to be subject to backup withholding, tax withholding for the IRS, but those foreign people are. So, you know, you want to document, know if you're paying a foreign person, and if they're doing work here in the U.S., Sometimes treaty provisions apply where they won't be subject to tax, but quite often they're subject to tax withholding, and the treaty might only reduce that tax withholding. So keep that in mind. Very important. Foreign person doing work overseas, you probably want to document their foreign status, but they do not receive 1099s. If they're doing work here, quite often they are going to receive not a 1099, but a different form, and they're subject to backup withholding if they're non-resident alien. The key, foreign residents, if you're a resident and you're here on a green card, you're going to basically be reported the same way as a U.S. citizen for 1099s. If you're a non-resident alien, do not live here in the U.S., then not a U.S. citizen, not a green card holder, then the foreign rules will apply. Why is, the 1099 NEC versus 1099 miscellaneous? And the distinction between them is very important, because when you issue, if you issue a 1099 NEC, non-employee compensation to a vendor or service provider, they're not only subject to income tax on that money, they're subject to self-employment tax. And this kind of gets into disagreements where, what is the classification of the income? What type of income? Is that earned compensation, or was it some other type of income? But this is why it's very important. Your 1099 NEC is subject to self-employment tax, which could be up to 15.3%. So that is very important. It's an extra tax on that money besides the income tax that the person has to pay. So that's why the issue will often come up that one person interprets non-employee compensation, while the payee thinks it should be 1099 miscellaneous income, which in most cases is not going to be subject to self-employment tax. As we talked about a couple of years ago, cause confusion, the IRS created this 1099 NEC, non-employee compensation. Before it was old 1099 miscellaneous, box 7, now it's 1099 NEC. And now we're getting to the point, who receives a 1099? As we talked about, independent contractors, not your employee. Your employee, they're not qualified as an independent contractor, they're getting a W-2. It's services rendered in the course of your business. So if you're paying your friend for, helping me out doing something, that's probably not your business, so therefore it's not 1099. You made payments to a partnership, estate, or trust, or corporation. As we talked about, corporation, it's going to depend on who's the owner of that corporation. If it's attorneys or if it's medical providers, they're still going to receive a 1099. If it's a corporation of another type, they probably do not have to receive a 1099. This is kind of an issue, too, kind of comes up quite often. People are confused. The $600 threshold. It's not just one payment. If you pay people throughout the year $600 or more, it's the cumulative amount of payments. So even if you're paying them $5 at a time and it totals up to $610, they get a 1099. And I think that's often confusing to people. They think one payment, it's the cumulative payments, and the 1099s are cash basis. So you're issuing the 1099 based on the cash that you paid out. Independent contractors, we all know who they are, landscapers, cleaning people, you're paying commissions to maybe someone providing services to you. They're the ones getting a 1099. The key here is employee. That's why it's very important to distinguish between employee and independent contractor, as we talked about in the beginning. The employee, you're paying half their Social Security and Medicare taxes. The independent contractor, they're on the hook to 15.3%. And the employee, you're doing backup withholding. In 1099 NEC, most cases, you're not doing withholding on that. So that's where, if you don't have the proper classification, IRS, New Jersey DOL can come after you. New Jersey is looking at unemployment withholding and FLI and those type of withholdings. 1099 NEC, this is the big one, the non-employee compensation. Federal tax withholding, in most cases, you're not required to do federal tax withholding under certain circumstances we'll talk about later. This is the one that's very confusing that kind of came in the last couple of years. Direct sales of $5,000 or more. It's something that you're selling to a product to someone else, and they're going to resell that product, and you don't have a retail establishment. It doesn't come up very often It can be done on it can be done, strangely enough, on 1099 miscellaneous and the 1099 non-employee compensation, both forms. There's spots for both forms. But I don't want to get into that. It's kind of something a little bit different. I want to concentrate on the 1099 non-employee compensation. This is kind of, we'll probably send out the PowerPoint to everyone, so I kind of wanted to give everybody a little bit more details on what each box is for. 1099 miscellaneous. Now this is the non-employee, you don't report non-employee compensation anymore on 1099 miscellaneous. It's for payments that were not non-employee compensation. And the big ones here, I think, that come up the most is other income. When you read it, it's a little bit confusing sometimes for people. It's other incomes where it's not reportable in another box, and it says prizes and awards. If you did if the person had to do a wager to get those prizes or awards, that wager, then it's reported on W-2G. So box 3 would only be there's no wager involved for prizes and awards. Most cases, it's going to be W-2G. Other income is also box 3, other income on 1099 miscellaneous is going to be where it doesn't fit any of the other boxes. And the most used ones are boxes 1, rental income, box 2, royalties. Rental income, $600 threshold, royalties only a $10 threshold. Other income, $600 threshold. The other big one that comes up, big ones that come up are box 6, medical payments. That's the one, even if you're a corporation, they get that. It's a medical payment. And box 10, proceeds paid to attorney. And I'm going to talk about in just a minute the difference between the non-employee compensation attorney reporting and the gross proceeds to attorney on 1099 miscellaneous. This, again, I just kind of went through the different boxes, and we're going to talk about them in detail, but I think we're going to probably try to send a PowerPoint to everybody, so I just wanted everybody to have a little description and back up for those boxes. I want to concentrate more on the rents, the other income, and the attorney's fees, because I think those are the ones that really come up. There is, in this area, I guess it could be a little bit in Sussex County type area, but in most cases, crop insurance proceeds is not an issue for most of our clients, or fish purchase or resale, box 9 or box 11. So we're going to kind of skip over those for now. Attorneys. This is probably one of the most confusing area for clients. Do I issue a 1099 NEC or do I issue a 1099 miscellaneous? And I just want to, if you take away one thing from this program, just keep this in mind. Your attorney, he's providing services for your trade or business. It's 1099 non-employee compensation NEC box 1. So your attorney, you're paying your attorney who helped you, that did work for your business. That's going to be 1099 NEC box 1. 1099 miscellaneous gross proceeds paid to an attorney box 10. It's in the course of a trade or business, but in most cases, it's not your attorney. It's a settlement proceeds for a lawsuit. It's opposing counsel that's getting a check for that other lawsuit. It's not your personal attorney who did work, who maybe is just a retainer fee or work that he did, handling an easement. It's not, that's your attorney. They're getting 1099 NEC, 1099 miscellaneous, box 10, gross fees paid to an attorney. And of course, a trade or business, your business, they're getting, it's more settlement proceeds. It's the opposing counsel is maybe getting a separate check. It's not your attorney. In the classic example here, I think they took this exactly from the actual 1099 instructions. You get a settlement check for a claimant's attorney. You lose the lawsuit. No one likes losing a lawsuit as an attorney. I've experienced it. You lose a lawsuit for $100,000, and you make the claim, or you settle the claim for $100,000, and then you're issuing a 1099 for $100,000, and that's going in box 10 of 1099 miscellaneous gross proceeds. That's not your attorney. You're paying the other side. You're paying the claimant, the plaintiff in the case. You're paying the other attorney as part of the payment. That goes in 1099 miscellaneous box 10. So There is cases where, you're going to issue two 1099s. You make separate checks to the claimant and the attorney. In most cases, that's going to be 1099 miscellaneous box 3. If it's not self-employment income, not W-2 income, box 3, other income, and then you are going to give the attorney a 1099 miscellaneous proceeds box 10. So in that case, you're issuing two different checks. If both names are on the check, it's almost always going to be 1099 miscellaneous box 10. So claimant receives a separate check. That's going to be sometimes going to be box 3, other income, 1099 miscellaneous. Then the attorney is going to get a separate check. He's getting a gross proceeds box 10. Legal settlement. This is one of the areas I think the questions come up all the time as well. That a legal settlement is a recovery taxable income or not, and what type of income it is. The IRS Supreme Court decision applies origin of the claim doctrine. So what does the origin of the claim mean? It means the claims that were made in the original complaint that started the lawsuit. Now, when you settle the case, you can make an allocation of the proceeds of the settlement between different classes of complaint. But the IRS is not bound by how you classify that income. Most cases, the parties, particularly the plaintiff, wants to move that into non-taxable income. And if the IRS wants to disagree and audit that issue, they can audit that issue, and they're not bound by how the two parties classify that income, which is very important. Personal injury, not taxable. But if there's a recovery of lost wages, that's taxable income. If it's a reimbursement of the expense the defendant was responsible for, that's generally non-taxable income. So emotional distress, which is kind of a common one that kind of gets pled. If there's physical injury, that's generally going to be non-taxable. If there's non-physical injury, in most cases, it's going to be taxable. So that's something to keep in mind. And the origin of the complaint. So you're looking at the complaint. If there was never a complaint for a non-taxable income, there's never a complaint for personal injury, then you can't claim it's non-taxable because it wasn't part of the origin of the claim. The other part of this as well, the IRS looks at it. Does the payment relate back to when the person was an employee? Even if they're not an employee now, even if they're not providing services to you now, the IRS would look at that as being wages. Now, I think most cases, it's probably issued as box 3 or 1099. It's issued on 1099 miscellaneous, 1099 non-employee compensation. But the IRS audited the issue. They would probably find that it was W-2 income if it was related to employment. There's often issues going back and doing W-2 for someone related to pensions and profit sharing and other issues related to doing a W-2 for someone who's no longer an employee. But if the IRS audited the issue, if the claim and the settlement was related to work that they were doing as an employee, it's generally going to, if the IRS decided, it would be W-2. Why is that important? It's important because if the IRS looked at it and the person never paid taxes on it, if it was W-2 income, you would have been withholding as the employer Social Security and Medicare taxes and income taxes. When you issue a 1099 NEC or 1099 box 3 miscellaneous, other income, there's no withholding on that. There's no Social Security taxes, no Medicare taxes, no income tax withholding, and you're not paying half of the Social Security Medicare taxes. That's where that issue could come up and hurt you in the future. I understand a lot of cases that it's not really reported that way, but the IRS rule would probably apply and require W-2 issued if it was related to their time as employment of the settlement proceeds. Rental properties. The rental properties often cause confusion of whether 1099 has to be issued or not. 1099 miscellaneous, that's what the landlord receives if they're getting over $600 rent. Most cases, the rent's gonna be over $600. And they're getting that if they have a commercial tenant who has a trade or business. If you're an individual tenant, you don't have to issue a 1099. You're not issuing a 1099 for renting a home. It's not your trade or business, so therefore you don't have a 1099 filing requirement. If your landlord's a corporation, even if you're a commercial tenant, you don't have to issue a 1099. So those same rules apply. Trade or business, corporation, same rules apply. But if you're getting money if you're a landlord and getting money from a management company who handles the property for you, and you're an individual owner or a partnership, or if you have a commercial tenant, you should get a 1099. Now, that's a 1099 miscellaneous, box 1. 1099 NEC, non-employee compensation, is generally what the landlord will be issuing to their electrician, repairman, plumbers, carpenters, landscapers, all those people that are listed there. There was a rule back in 2009 that said that, rental properties, self-managed, you own your own rental property, you're managing it yourself, you have to issue 1099s to your service providers listed above. Then, there was a lot of backlash to that. You have generally a lot of very small individual rental properties, people who are not used to issuing 1099s, and that was kind of taken away back in 2011 and was repealed. So the issue becomes whether your rental property is considered a trade or business, whether you have to issue 1099s as the landlord to service providers. And if you're a real estate professional, if you're claiming to be a real estate professional with multiple properties, you're claiming to be a real estate professional, you're grouping those properties to be able to deduct the losses, then it's a trade or business for you. The other issue that's come up a few years ago is they created the 199A deduction, where you get 20% deduction from pass-through entities or for property that you own. So if your rental property could possibly, if it's making money, could qualify for a 20% deduction. But you're supposed to be a trade or business to get that trade deduction. The issue often is not great for a lot of people because most rental properties with depreciation are losing money. So the 199 really isn't a factor. But if you have a rental property that's making money, you're taking that 20% deduction, you probably should issue 1099s because you're considering it a trade or business for that 20% pass-through deduction, a business deduction. The IRS can say, hey, you're taking 20% deduction from your income, you're a trade or business, but you're not filing 1099s. So rental properties, generally, if you're an individual owner, you own 1 or 2 rental properties, it's not your trade or business, probably no 1099 filing requirement. You're a real estate professional, 1099 filing requirement, or you are taking your rental property making money and you're taking that 20% pass-through deduction, your accountant's doing that for you, you're saving money on tax-wise, it might create a 1099 filing requirement for you. Deceased employee. This unfortunately comes up every year. You have an employee who passes away during the year, and their final check is owed to the family or to the estate. If you have a deceased employee and you're making that payment after they passed away, that wages doesn't get reported in box 1 of the W-2. They pick it up if it's paid out in the year they passed away as Social Security and Medicare wages, but it's not reported as taxable wages. Since a family is getting that getting those wages, you report it as box 3, 1099 miscellaneous other income. In the tax ID number of the beneficiary, the personal representative, basically the estate's tax ID number. So the beneficiary, the spouse, or the employee's estate tax ID number. But you are still issuing a W-2 for Social Security and Medicare taxes that they paid on that, as well as the other wages, as taxable wages that they earned during their lifetime. But the amount that was paid out to the family is still subject to Social Security and Medicare taxes it paid during the year that they passed away, but not taxable wages. Now, if you pay it out a year after the employee passed away, Then it just gets reported box 3, other income, 1099 miscellaneous, not subject to Social Security and Medicare taxes. The year after you pass away, that person's not, you're not issuing a W-2, even though I've seen it quite often done. They shouldn't get a W-2. They're no longer with us, and they're not paying Social Security and Medicare taxes. So it would all be reported 1099 miscellaneous, box 3, other income, note in his ID of the beneficiary of the estate, the person you paid, but there is no Social Security and Medicare taxes paid on that. Comes up, unfortunately, every year. You know, I know we have quite a few government clients in the audience. This question comes up quite a bit: student transportation cost reimbursement. The general rule is no 1099 has to be issued. So if you're reimbursing, you know, initially there's a dispute and it's resolved where the Board of Education ends up reimbursing a parent for the transportation cost of that parent to the school, there's no 1099 that's required. It's only required if the Board of Education knows that the parent is being paid more than $600 or more than their expenses in that transportation. Most cases, the town, the Board of Education is not going to know what the parent's costs were to transport that child. Therefore, there's going to be no 1099 issued. So it's only when, you know, if you pay the parent $5,000 for reimbursement of transportation costs, no 1099, unless you know more than $600 or more of that was beyond the parent's actual transportation costs. Most cases, you're not knowing that, so there's no 1099 required. Scholarships. This question comes up all the time. You know, people generously give a scholarship to a student. As long as the funds are required to be used for college, whether you issue a cash or check, as long as the funds are required to be used for college, no 1099. Now, if the kid ends up not going to school, that doesn't change that there's no 1099 reporting requirement. The student should pick that up in income, as taxable income. It's their responsibility to do so, but it doesn't change that there's no 1099 reporting requirement for the scholarship provider. So that's very important, comes up quite a bit. No 1099 needs to be issued for scholarships, cash or check, as long as the funds are given out with the requirement that they be used for college. If they aren't given out, you just give a scholarship or reward for a student and they can use the money as they will, then a 1099 should be issued. And also, this is generally more involved in fellowships and on the graduate level. If their services have to be are required for that scholarship or fellowship or grant, then you could have a W-2 or 1099 reporting requirement. But in general, no 1099 needs to be issued for scholarships as long as the funds are given with the requirement to be used for college, even if they're not actually used for college. 1099 deadlines. One of the most important things, 1099 NEC, there's no automatic extension. So you can file for an extension, but the downside is, let me go to the other slide here, is the 1099 is still due to the recipient by January 31st. So you probably have a little wiggle room when they actually get it, but the reality is, you know, you can file, it's due with the IRS by January 31st, but it's also due to a recipient. So you can extend the time to file with the IRS, but it's still due January 31st to the recipient, because the recipient needs that to complete their taxes. So, you know, that's one of the ones with 1099 NEC. There's no automatic extension. It's due January 31st to the recipient. So you can file an extension to actually file with the IRS, but the technical answer is the 1099 recipient, the person who you're issuing the 1099 to, who paid for services more than $600 or more, they're required to get the 1099 by January 31st. You know, 1099 miscellaneous, there's a little more wiggle room with the filing deadline. It goes back to February 28th, e-filing a little bit later than that as well. But the key one here is often, even though you can get an extension, even though their filing date with the IRS is later, the recipient is supposed to get it by January 31st. One of the biggest questions comes up is e-filing. Now, the IRS is talking about lowering the e-filing requirement, but right now it's 250 1099s that have to e-file. It's being talked about it's going down to 100 and then down to 10. Or they haven't issued final regulations which reduce that, so right now it's 250. But New Jersey is mandating e-filing for all W-2s and 1099s. But, you know, it's a little bit confusing. This created a lot of confusion the first year of 1099 NEC because generally the IRS shares their file with New Jersey, and you file a form with the federal government, and New Jersey gets that form. First year, IRS wasn't set up to share those files with the states. So New Jersey still had a filing requirement for the 1099 NEC. Now, 2021, 2022, luckily, it's back part of the combined program, federal and state reporting. If you e-file with the IRS, New Jersey, IRS is going to give that file to New Jersey. So as long as you file as part of the FIRE system, therefore, New Jersey's getting a copy. You don't have to file separately in New Jersey. It's a little bit different if you're doing income tax withholding on the payment, but in most cases, most 1099 NECs, 1099 miscellaneous, you're not doing backup withholding. So for the general person out there, client out there, they're just going to file federal 1099s, and the New Jersey or other states are going to probably pull that down. Most states are part of that program. More and more states are becoming part of that program. There's a few states that don't require any 1099, surprisingly, New York, which is kind of shocking. And other states where it's not even clear. In most cases, you can file the federal government, especially if the income's only here in New Jersey, and you don't have to file separately with New Jersey. New Jersey actually has a little bit higher filing requirement of $1,000, but you know they're just going to pull that total file that you filed from the federal government. It's going to share it with New Jersey. What happens if you don't file on time? You know, it happens quite often. If you don't file on time, you find out you missed someone, you want to file as soon as possible because the penalty goes up the longer you didn't file. So it starts at $50 with the first 30 days, goes up $110, $290. If you didn't file everybody, you know, the penalties, as you can see there, become quite substantial. If the IRS finds that you did it with intentional disregard, the penalty is $580 per form, and there's no maximum penalty. It could even be higher than that. So also there's the definition of small business because the maximum penalties are dependent on whether you're a small business or consider a large business. But in general, you want to try to file timely because if you don't, you're going to get hit with a penalty. What causes late filing? You know, what causes these penalties? You file late. You're over that 250 threshold and you file paper, they can hit you with a penalty then. But the most common errors that come up are the name, the Social Security, and the EIN number don't match. So you try to do everything right. You got a W-9 from your service provider, and the name and Social Security match kind of kickback from the IRS. Generally, what happens is they're going to issue you a notice, and you're going to get a chance to correct it. You reach out to the service provider. Maybe there was a typo in the name. Maybe there's a typo in the Social Security number or EIN, and you just correct it. You file the notice, and you correct it, and the IRS is going to abate that penalty, remove that penalty, or not apply that penalty if it's not been assessed. But in some cases, if you did miss the filing deadline, you're going to be hit with the penalty. Now, in a lot of cases, you can apply for reasonable cause to try to abate that penalty. I don't want to go into all the details here, but you tried in good faith to comply with the law. You have a good filing history. There's a reason why someone new was in the position. You've done actions to correct that. You have a reasonable chance of getting that penalty abated. So just because you're being assessed the penalty doesn't necessarily mean that you can't fight that penalty for reasonable cause and it be abated. And quite often, if you have a good compliance history before and after that penalty will be removed. You can't get away with it multiple times. Sometimes government entities, because it's coming out of the pockets of the taxpayers, have the IRS gives a little more leniency on that, but you don't want to rely on that. You want to file timely. But, just because you're assessed that penalty, in most cases, I think you want to at least try reasonable cause to try to have that abated. Backup withholding. Backup withholding is really going to apply in the cases where you have someone, they refuse to file the W-9, they refuse to give you their tax ID number, then you're supposed to withhold 24% tax. And I think in most cases, it's not going to come up, particularly if you get a W-9 beforehand. But if the issue becomes someone doesn't fill a W-9, you've already paid them. You can't do 20% with 24% withholding. So you're kind of stuck in that position. And, the best way is to kind of work with the IRS on that issue. But any further payments for certain need to be 24% withholding. In most cases, if you start withholding 24% of a person's payment because they didn't give you a Social Security number or a TIN number, or a TIN number didn't match, it's incorrect, they're going to correct that issue for you real quick. But the biggest problem is you've already paid them, you don't have a W-9, and you don't have their TIN number at all, and you can't do the backup withholding, and you can't complete the 1099, and then really you have to kind of work with the IRS to correct that situation and make sure you do withholding on them in the future, or you make sure you have a good tax ID number. A list of payments are subject to backup withholding, and payments are excluded from backup withholding. As I said, we're going to try to send this out to everybody so they can take a look at this. Real quick, 1099K, because this has been in the news, is originally they had changed the law that 1099K was going to be issued to everybody who got $600 payments. The rule for 2021 was 200 transactions, $20,000 in payments. $600 in payments was suddenly going to include a whole lot of people. So there was great complaints about it. This is an actual law, so the IRS could not comply with the law, but they delayed its implementation for another year. This is people with DoorDash, people with, getting money, Venmo payments. The issue was also as well that you Venmoed money to your friend, but you didn't mark it personal, and now all of a sudden you get a 1099 for that. And you could still get a 1099. The IRS is not requiring the financial institutions to issue 1099 for that $600 threshold, but they could. So you still may get a 1099 for a $600 payment to your friend or from Venmo that wasn't marked correctly. You want to report that on your tax return and then kind of wipe it out. I would report it as a Schedule C payment or other income, and then wipe it out with a negative $600 and just mark it and put a note with the return that it was personal and marked incorrectly. But that's something to keep in mind. Just because the IRS is not requiring, is back to the higher threshold, they left it optional for people who already set up their system for 2022 to issue 1099Ks for $600. And this is also where those transactions that were credit card payments are going to be reported. Credit card payment, no 1099 miscellaneous, no 1099 NC, but you could have a requirement. Those people are getting the 1099Ks to report those payments. So this is another one that comes up every great while, is you're making, one person is supposed to make a payment, then another related entity makes that payment for them. The general rule is the last person to pay is going to file the 1099, kind of file the money. So if you have one business and the other business made the payment to your service provider, generally the person who made the payment is going to record that payment, issue the 1099. That's the general rule. There's always exceptions to every rule, but the general rule, if the payment's made on behalf of another person, that person, that entity that issued the payment to the service provider is going to be the one who issues the 1099 NEC. Well, hopefully you guys are still awake, but I threw a lot of information. I tried to keep it on the high side as much as I could, but I threw a lot of information at you guys very quickly. We're going to now kind of open it up to a short amount of questions, if anybody has any.
Yes, thank you, Glenn. That was definitely a good amount of information, but great. We did get a couple questions in, so we'll quickly go through those. First one was, what about your health insurance provider? I think this is when you were going over who gets a 1099. For example, we have Central Jersey Health Insurance Fund.
You know, in general, I think in Central Jersey Health Insurance Fund, I would guess is probably a corporation. You would probably get I would get a W-9 from them. But health insurance providers, non-insurance payments that you're paying out of pocket, writing a check to, could get, even if they're a corporation, could get a 1099, miscellaneous box 6 payment. So even if they're a corporation, I misspoke for a second, even if they're a corporation, they could get a 1099 miscellaneous box 6 payment. If they're a tax-exempt entity, then they wouldn't get it, but in general, they would get 1099 miscellaneous box 6 1099.
All right, next question was, if payments are made to individuals for a stipend for expense reimbursement, does this require a 1099?
You know, if you're documenting the expense as part of an accountable plan, they're giving you receipts, then you probably don't need to issue a 1099 or don't need to include it in their 1099 NEC. But if you're just giving them a stipend and you're not asking for the actual expenses, then the 1099 requirement would kick in.
Okay, next one was, does an attorney still get a 1099 if paid by credit card?
That would go under the general 1099 NEC rules. So they probably would be getting something from the credit card company, and it would not require an issuing a 1099 by you as the business entity.
Great. If we are paying tuition directly to a parent due to a settlement and the parent has paid the OOD school out of district, I think, do we issue a 1099 to the parent? This
question comes up quite a bit. If you're found to be responsible for that tuition, it was your duty to pay that tuition as part of the settlement. And that's the case in most of those kind of like special needs type situations where it's out of district. No 1099 would need to be issued since you're basically reimbursing the parent for the cost.
Great. Next question. All right, we only have a couple more. If the W-9 has a name on line 2 different from line 1, which name do you use for 1099?
You would use line 1 name.
Great. Okay. Can an employee receive a 1099 and W-2 from the same company?
Generally, that question comes up every once in a while as well. If you paying the employee, as a teacher, and then they have a sideline business where they're working for many people, multiple people, as a snowplow remover, completely unrelated to their work as a teacher, you could issue them a 1099. In most 99% of the time, everything should be W-2.
As an employer, we received grant funds to pay several employees. Do we issue a 1099 to each employee for these grant funds?
I would need to, if you send me the details on the grant funds, I'm happy to get back to you on that.
Just to remind, sorry, I was going to say, a couple people asked about the PowerPoint. We will share the PowerPoint and the recording, and I'll put Glenn's information in there. You can reach out to us if you have, more specific questions. I'm sure Glenn would be happy to answer them. Yeah, they're rolling in. One more I'll get to, and then we can wrap it up. And like I said, if you guys have specific ones, you can reach out. This one says, a New Jersey governmental entity has been mailing annual forms 1099 miscellaneous and 1099 NEC to the IRS. due to less than 200 1099 forms issued each year, how should same be filed to the state of New Jersey?
Great question. I would say, in general, I would recommend e-filing. I think it's going to make your life easier. But, I'll go look at that issue because it comes up every once in a while. I don't remember the exact answer on that, but in general, I would recommend e-filing. There's a lot of services that you can do online that will handle the e-filing for you and actually send it out to the service provider and do the whole kind of shebang for you. But yeah, that kind of issue comes up every once in a while. I will look it up and send it out to the person who sent that question.
Great. All right, great. Well, thank you everyone for your questions. Again, we'll send out all the information we have. And again, we're always happy to have a further conversation. I just want to note too, there will be an exit survey when the webinar ends that'll load in your browser, and we appreciate any of your feedback, discussion topics for future sessions. We'll be hosting the series throughout the year, so we're happy to cover topics that are of interest to you. And I think with that, Glenn, we're probably about ready to close it out.
Sounds good. Thank you, everybody, for attending. And if you email your questions, the person with the question on the paper filing, we will get back to you.
Great. Thank you so much, everyone. Thank you, Glenn, for sharing your information with us today. And for everyone who joined us this afternoon, we will see you all soon. Thanks again. Have a good day.